Good morning, this is Larry Edelson from my Uncommon Wisdom Weekly Video Market Update for Thursday, July 7th. Welcome back from a nice holiday weekend. I'd like to go right to the charts. We are, of course, starting to see some action unfold. We, quite to the contrary of my expectations, actually saw some pretty wild action on Thursday and Friday of last week. And we're seeing some good action again already this week, right after the holiday. So let's go right to the gold chart. Last week I indicated to you, in general, that you shouldn't expect much out of the markets pre-July 4th holiday. And again, I was quite wrong there in two fronts. First, my video from last week I had recorded on Tuesday of last week, a couple days before its regular due date, due to the holiday schedule. So when I did record that video, there wasn't much happening in the markets. And as we know, Wednesday, Thursday, and Friday, they really started to rock. Gold I expected to be on the weak side as we headed into the holiday, and lo and behold, we sprang right up on Tuesday and Monday's overseas Asian trading in gold, and we are now looking like we might test the 1540 level in gold. However, due to the seasonal weakness that's normal for this time in gold, and the cycles which point sideways to lower, I am not expecting any breakouts in gold. That will probably not occur until post Labor Day in September, and as we really get the seasonal strength back to the metals markets in October. In the meantime, we could pop up to 1540. We could just as easily drop back down to 1450, 1477. Either way, those are just short-term moves, and I don't want you to be sidetracked by them. The long-term trend is substantially higher. I recommend using any kind of weakness in gold to add to your gold positions for the long haul. Only for the short term should you be using these commentaries if you're a trader. And I try to give you insight for your longer term investors here so you can understand what's going on in the short term, keeping fully in mind that it's really the long term that counts for almost all of us. Let's now go to the silver chart. Here too we're seeing another rally. We tested support late last week, and right after the holiday we saw silver jump on Tuesday as we got back to normal trading. We're starting to see some additional strength in silver, but like gold, seasonally and cyclically, I don't expect silver to break out to the upside yet, and I do expect a test of the $30 and $28 levels heading into the summer. So for short-term traders, I'd be looking to sell strength, and for short-term traders, I'd also be looking to buy weakness. And intermediate term and long-term investors, I would be looking for a sweet spot around $30 this summer, even down to 28, possibly even a little bit lower, to buy and accumulate silver for the long term. Now, quickly to the Dow, make that the dollar index. Seeing a little bit of a rally in the dollar index. This is one market that was pretty quiet towards the end of last week going into the holiday, and quiet so far this week post-holiday. Dollar is rallying a tad, but it's really mixed. It's rallying a little bit against the euro. It's falling a little bit against the Aussie and the Swiss. So we're seeing that mixed action here, but overall the dollar remains very weak on an intermediate and long-term basis. If we get any rally out of the dollar at all, it's going to be meager, it's going to be brief, and only a short-term bounce. To the Dow now. The Dow is the one that really, I think, caught not just me off guard, but pretty much everybody off guard late last week. Late last week, as we were coming into the holiday, and again, because I had to record my weekly update last week a few days early due to the holiday schedule, the Dow was below 12,000 when I recorded it, and I didn't expect the Dow to do much, perhaps rally a little bit into the holiday, but I certainly did not expect a good 600-700 point rally that we saw on Wednesday, Thursday, and Friday going into the holiday. So far this week, post-holiday, the Dow is holding those gains. However, this rally here, as strong as it looks on the charts, is a bit overdone. My indicators are saying on the short term, the rally in stocks is overbought, and cyclically, I am not expecting a breakout in the Dow to the upside just yet. Keep in mind, long term, I am very bullish on the Dow and the S&P 500. I am also extremely bullish on Asian markets. The long term, we're going to see these things get monetized higher as assets reflate to adjust for today's heavily indebted world, and debts get devalued against financial asset prices and natural resource and tangible assets of all kind. Everything except U.S. and European real estate, quite frankly. That's going to take the Dow to new record highs. There's no question about that in my mind. We're far more likely to see Dow 22 or Dow 25,000 than Dow 6,000. But it's not going to happen just yet. It will not happen for probably another 6 months to a year, in my opinion. And in the meantime, we're likely to see some continued weakness as the stock market continues to digest a weakening economy, and the fact that the Fed is going to play tough in the shorter term, stay out of the market, stay out of QE, quantitative easing, until things get so bad that they have no choice to come back in. Once the market figures out that that's what's going to happen, that the Fed is going to come back into these markets, then it will start to reflate again to the upside, much like it did coming out of the March 2009 low. So, having said that, please stay tuned to everything I publish, and have a good weekend. This is Larry.